the decline in the US dollar exchange rate. Against the Iraqi dinar and its broader economic implications. On Sunday morning, the exchange rate of the US dollar witnessed a noticeable decline against the Iraqi dinar in the markets of Baghdad and Erbil, located in the Kurdistan region. This drop reflects the ongoing volatility in currency markets and coincides with new measures introduced by Iraq's central bank aimed at tightening financial regulations in the real estate sector. These developments, while intended to address issues such as money laundering, have sparked significant debate regarding their potential impact on Iraq's economy. Exchange rate trends. The dollar's exchange rate experienced a decline with the opening of trading on Sunday at the Al-Khifa and Al-Harithiyah stock exchanges, registering 150,650 dinars per $100, compared to the rate of 150,700 dinars per $100 recorded on Saturday morning. In Baghdad's local markets, selling prices in exchange shops stabilized, with the selling price reaching 151,000 dinars per $100, while the buying price ranged between 150,800 and 150,900 dinars per $100. In Erbil, the capital of the Kurdistan region, the dollar's selling price also dropped, recording 150,500 dinars per $100, while the buying price stood at 150,400 dinars per $100. These figures reflect fluctuations in the value of the dinar, which have been influenced by a range of domestic and international factors, including monetary policies, market demand, and external pressures on the Iraqi economy. Central bank's new real estate regulations. On January 16th, the Central Bank of Iraq announced new regulations targeting real estate sales. Under these measures, the minimum value for real estate transactions requiring verification was reduced from 500 million dinars to 100 million dinars. Transactions exceeding this amount must now be conducted through authorized Iraqi banks, requiring both buyers and sellers to open official accounts. This step aims to enhance transparency, combat money laundering, and enforce due diligence controls within the real estate sector. The new instructions mandate that real estate departments follow stricter guidelines to ensure compliance with anti-money laundering and counterterrorism financing regulations. While the government asserts that these measures will bolster financial oversight and promote stability, the decision has been met with mixed reactions from lawmakers, economists, and industry stakeholders. Parliamentary responses. Jamal Coger, a member of the Parliamentary Finance Committee, expressed support for the central bank's decision. He argued that reducing the threshold for real estate transactions from 500 million to 100 million dinars would not stifle real estate activity. On the contrary, he emphasized that this measure could foster financial liquidity and increase accountability. Coger added that questioning the source of funds, commonly practiced in other countries, is a necessary step to ensure transparency and combat illicit financial practices. Coger also highlighted the importance of offering incentives and facilitating procedures for real estate buyers and sellers. According to him, these complementary measures are essential to mitigate potential challenges arising from the new regulations and ensure that the housing market remains active. Concerns about economic recession. Despite the intended benefits, concerns have been raised about the potential repercussions of the central bank's decision on Iraq's economy, particularly its real estate sector. Critics warn that the new rules may inadvertently lead to an economic slowdown by discouraging property transactions. Hussein al-Saberi, deputy chairman of the Investment Committee in Iraq's Council of Representatives, expressed skepticism about the effectiveness of the new regulations. He criticized the central bank's policies as inconsistent with the realities of Iraq's investment environment, warning that these measures could hinder the growth of the real estate market. Al-Saberi pointed out that Iraq's banking sector is underdeveloped and lacks the capacity to handle the additional responsibilities imposed by the new regulations. He also argued that requiring all high-value property transactions to be conducted through banks would increase bureaucracy, delay transactions, and impose additional financial burdens on buyers and sellers. Al-Saberi further noted that while combating money laundering is a valid objective, the government must balance its regulatory goals with the need to support economic activity and investment. Impact on the real estate market. Economic expert Nabil Al-Maroumi echoed these concerns, warning that the central bank's decision could lead to a downturn in Iraq's real estate market. According to Al-Maroumi, obligating buyers and sellers to open bank accounts and verify the source of funds for transactions exceeding 100 million dinars could deter potential buyers. Al-Maroumi explained that the decision may discourage demand for real estate due to the challenges buyers face in securing large sums of money and depositing them in banks. Additionally, the bureaucracy associated with Iraqi banks could delay transactions and increase the cost of property deals. These factors, he argued, would add to the financial burdens faced by those involved in the real estate market, potentially slowing down economic activity in this vital sector. Broader implications for Iraq's economy. The central bank's decision is part of broader efforts to reform Iraq's financial system and align it with international standards. By increasing transparency and reducing the risk of money laundering, these measures aim to improve the country's financial reputation and attract foreign investment. However, the implementation of these reforms has revealed significant weaknesses in Iraq's banking infrastructure and regulatory environment. Iraq's banking sector has long been criticized for its inefficiency and lack of modernization. Many banks in the country are unable to meet the demands of a rapidly growing economy, and the added burden of enforcing new regulations could exacerbate these challenges. To address these issues, experts have called for comprehensive reforms to strengthen the banking sector and improve its capacity to support economic development. Recommendations for policymakers. To ensure the success of the central bank's initiatives without negatively impacting the economy, policymakers must adopt a balanced approach that addresses the concerns of stakeholders. Key recommendations include: 1. Strengthening the banking sector. Iraq's banking system needs significant investment in infrastructure, technology, and human resources to enhance its efficiency and capacity. This will enable banks to handle the increased workload associated with the new regulations and provide better services to customers. 2. Streamlining bureaucratic processes. Simplifying procedures for real estate transactions can help reduce delays and minimize the financial burden on buyers and sellers. This could include adopting digital platforms for property registration and payments. 3. Offering incentives. The government should introduce incentives to encourage compliance with the new regulations, such as tax benefits for property buyers and sellers who conduct transactions through banks. 4. Raising awareness. Educating the public about the benefits of the new measures and addressing misconceptions can help build trust in the financial system and encourage greater participation. 5. Monitoring and evaluation. Regularly assessing the impact of the new regulations on the real estate market and the broader economy will enable policymakers to make necessary adjustments and ensure the effectiveness of the reforms. Conclusion. The decline in the exchange rate of the US dollar against the Iraqi dinar and the central bank's new regulations on real estate transactions reflect the complex challenges facing Iraq's economy. While the government's efforts to combat money laundering and improve financial transparency are commendable, the implementation of these measures must be carefully managed to avoid unintended consequences. By addressing the concerns of stakeholders and investing in the development of the banking sector, Iraq can strike a balance between regulatory oversight and economic growth. With the right policies and reforms, the country can build a more resilient financial system and unlock its full economic potential.